One of the big questions is, what is money?
For practical purposes, it exists in a series of heterogeneous databases, very different databases.
Do you believe in crypto?
Digital currency may be an answer, but it is the highly speculative asset.
I do own Bitcoin.
There is no second best.
Welcome to the Crypto Curious podcast. We usually break down the biggest stories in crypto, but today we're switching things up with a very special guest bringing some fresh insights from the industry. Whether you're new to crypto or a seasoned pro, we've got something for you. So let's dive in.
That's right, Craig. Today we are joined by Kain Warwick, a pioneer of DeFi, decentralized finance, founding Synthetix and now Infinex.
Yeah, to provide some backstory on Kain, he's been a builder since the early 2017 ICO days with Haven, and now this cycle working on the crypto everything app called Infinex. Welcome to the show, Kain.
Hey guys, thanks for having me.
No worries. Great for you to be here, Kain. So we'll just start very briefly. We'll get you to touch on your background, how you got into crypto, and then founding Synthetix.
My background is actually e-commerce. I came from a retail background. And so my original kind of entrance into crypto was this psyop of Bitcoin as a payment method, which is actually nonsense, but it seemed cool at the time. This peer-to-peer electronic cash system that Satoshi proposed. And so back in the day, I signed up for Coinbase Commerce. I was probably one of the first people to sign up for Coinbase Commerce in Australia to use Bitcoin as a payment method on our e-commerce website. Someone did buy something with Bitcoin, but unfortunately back then Coinbase Commerce was permissionless. I don't know what Coinbase was doing, but they made it self-hosted and permissionless. So you had to create your own seed phrase, and I've absolutely lost that seed phrase. So there's some Bitcoin burned there. We never got it out. It just sat there. So lesson learned, should have just put it into Coinbase custody instead of Coinbase Commerce, but here we are. And then out of that, I started a payment company called Blueshift, and we worked with a lot of the early crypto exchanges in Australia. So bitcoin.com.au, CoinSpot, CoinJar, and helped them back in the day when banks were debanking everyone. This was a fun game that they would play where they would spin up entities to try and get around the banks shutting down their accounts on a weekly basis. And we had this network where people could walk in and pay cash and buy Bitcoin. So that was a company called Blueshift. It's still around, still works with all the crypto exchanges. And that was kind of how I started actually building in crypto and really got into crypto.
Wow, awesome. So you've obviously been in the game for a while now, and this show we're covering off the weekly news, trying to figure out what's happening this cycle. 2017, it was all about ICOs. 2021 was all about NFTs and monkey JPEGs and DeFi. That's right.
Yeah, don't forget about DeFi.
That was 2020 DeFi summer. And now with this cycle, what do you think is the biggest difference now that you can see compared to the others? Obviously, besides the institutional level investment, what's the biggest difference you can see?
Yeah, it is quite funny. There is this barbell kind of structure to the market, right? Where it's institutional ETFs, a ton of ETFs, other listed assets, MicroStrategy, very TradFi enabled, BlackRock getting involved. So there's all of this very TradFi-esque stuff coming in and embracing Bitcoin. And then on the other end of the barbell, you have smooth brain meme coiners in the trenches just PvPing each other. So it doesn't feel like there's much in the middle of the barbell. It's really those two extremes.
Yeah, that's right. So there's been some obviously massive changes over the past 6 to 12 months with the change of administration in the US. Trump and his team are very bullish on the crypto space, and they've announced things like a new advisory committee to create new policy, which is going to help a lot with stable coins and market structure. But they've also mentioned a Bitcoin strategic reserve. So what do you think are the chances of something like this getting through? And what do you think the impacts would be if they did?
I think there is less and less chance in the short term. The chance in the short term feels lower than it was before the inauguration. There was a bit of hopium that it would be an instant thing that would happen. I think longer term, there's still a chance at some point in the administration. Remember, we've got 4 years. So it doesn't have to be in the first,
We're in the first
20
month.
minutes. Crypto people are very impatient. This is not even a long game. 4 years is not a long time, but especially for something like that. I think the thing about a Bitcoin strategic reserve is that it's kind of a one-way door. You really want to be sure that this is what you want to do as an administration, because while you can unwind it, it's probably not an easy process to unwind. It strikes me as something that it would be prudent for the Trump admin to really be sure that this is what they want to do. So the fact that they have taken a bit of time to think it through and they've got this advisory committee actually feels bullish. I think at the end of the day, it is a smart thing to do. I think sovereign nations accumulating Bitcoin as a hedge against global monetary chaos is a smart thing to do, but you don't want to rush into it.
Yeah, totally. And I think Trump's a good sort of topic because he's obviously launched the meme coin, which was sort of the final boss of all attention mindshare, launching a crypto coin and completely rugging the market. Now, we've spoken on the podcast, we had a little debate a few weeks ago. I was saying that I was a bit bearish because that's like the top signal and you don't get any bigger than Trump. Even if Kanye launches a coin, still not as big as Trump. What do you say to bears like me who might say, okay, the final boss has launched a meme coin, we're going to be struggling for the next 6 months here? Like, do you think we're still early in the cycle or do you think we're in Q4?
I think that the meme coin cycle, this is 100% a local top, right? Now, that doesn't mean that it's the structural market top for the cycle, because I think we still have a macro setup that's quite bullish. So, do meme coins make a recovery? I don't know the answer to that, but I do think that over the last couple of cycles, we have seen this increasing decoupling between different sub-cycles within the cycle, right? So, you mentioned DeFi, you mentioned NFTs. There was the Alt-L1 thesis, the Sol, Luna, Abax, 3 arrows meme. And so there is this idea that meme coins were a sub-cycle within the cycle that was also a response to the low float, high FDV VC coin meta, which was its own sub-meta that kind of happened. And so you have these cycles kind of rolling. The question then is, okay, if the meme coin sub-cycle is over, but we're still in a macro bull market, what's next? And if you can answer that, you're going to be a very wealthy person.
Yeah. Well, the crypto market's always looking for a narrative to latch onto, and only time will tell. But yeah, speaking about crypto cycles, Ethereum has under a lot of criticism this cycle for,
not pumping.
Yeah, not pumping, but many of the challenges from like a user experience or competitors like Solana coming out with a better user experience potentially. What's your thoughts on Ethereum? Is it going to be flipped by Solana, or is it just the narrative that's taken hold?
I mean, it hasn't pumped. I think that's pretty unequivocal. Someone in one of my groups was posting, if you bought ETH in some crazy time in prehistory, that like you're flat like 4 years later, something like that. Like it's pretty diabolical, right? To find an asset in crypto that you could hold for 4 years and neither make or lose money is pretty insane. I don't think there's many cases where you could pick a chart, 4 years later and be neither up nor down. So I don't really know what to say about that from a sort of structural setup. I do think at the end of the day, the Ethereum community is still the smart contract platform to beat. Even Solana at its peak, even though it had a lot of transaction volume, meme coin activity, a lot of new users coming to the platform, a lot of active addresses, the depth and breadth of activity on Ethereum probably still outweighs it. There's just a lot of different things, even NFTs, even though NFTs have obviously died down significantly, there's still the large cap NFTs. There's still activity happening, CryptoPunks, Pudgies, etc. You've got still a ton of DeFi activity. You have a lot of different tech, privacy tech, etc. So the developer ecosystem in Ethereum is still the biggest and it's the one to beat. Why has that not translated into better price action? That's a very good question. My thesis is that the scaling roadmap of Ethereum, this fragmentation that's been created through L2s, has created a bit of choice paralysis for investors where they don't really know, which token to buy. Do you buy ARB? Do you buy Optimism? Do you buy Blast? Do you buy ETH? If you're a new entrant into the ecosystem, you may not have transacted on mainnet. Why would you buy ETH if that's the gas token? But as an investment, it's not 100% clear. And for a lot of people, they're on their own base, right? So they go buying Coinbase stock,
Yeah, no, it's going to be key to see, do we see a return to the utility meta I think we've been calling for that for the last 12 months, but we'll have to wait and see. But I guess I want to get into Infinex. Now, this is a project that I'm very bullish on. Just to give the listener a bit of context to what Infinex is, essentially going to be the app to be your new home of crypto. So you sign up, there's no need for seed phrases. You can use passkeys, which is Face ID or fingerprint, depending on your device. And I don't know about you guys, but I've actually lost seed phrases before. And even now I lose my backup seed phrases still. So to have a pass key to have my crypto protected is pretty handy because you can't lose your fingerprint. So Kain, I want to hear it from you. What is your vision for Infinex and sort of where do you see Infinex's place in the crypto market over the next 12 months?
Yeah, I mean, I feel like if you're still losing seed phrases in 2025, it's a bit of a skill issue, but that's what we're here for it. Like, there's a lot of skill issues going around. So, we're here to try and solve that problem for people. I think that the thesis behind Infinex is that we have so many cool applications across different blockchains in the ecosystem that are still somewhat inaccessible to the average person. The average person is still more comfortable using Binance or Coinbase or Kraken than they are going on chain. There are obviously a ton of enthusiasts. There's people, again, in the meme coin trenches trading with Photon and Solvlayer and Phantom and things like that. But it's a minority of people. Not everyone, is willing to get in a trench and get into a pitch battle with a bunch of other trenches, right? Like, it's a lifestyle. It's not a thing that you just turn up and it's like, yeah, this is what I want to do with the rest of my life, right? And so we have to have a platform that makes all of these things that are really cool that we built over the last 4 or 5 years, from DeFi to NFTs to trading platforms. We need to make that accessible to the average person. And that means leaning into better UX, better custody, and all of these new technologies that are available now to reduce the education required, not to put you guys out of the job, but to reduce the education required for someone to get on chain and start doing things on chain. That's our goal. That's why we're building the platform. And we think that is the future. We can't keep living in a world where everyone's accounts are on centralized exchange.
Now that makes a lot of sense, going after your retail customers that want an easy user experience. That's what everyone wants when they're participating in the ecosystem. Obviously, your first users are probably going to be those more crypto natives. Are you also looking at, businesses and institutions, or is it primarily for the retail investor to participate?
This is more of an end user focus than an institutional focus. I do think that there is an institutional angle, particularly for family offices, hedge funds, people like that, to be able to do things on chain. It's funny, you talk to some of these organizations and they're still not on chain. They're still mainly trading on Binance or Bybit or BitMEX or whatever. And so giving them access to on-chain opportunities, because that is where the alpha is, I think is going to be something that is quite valuable. But in the first instance, it's about solving problems of average everyday user. And then we'll be kind of branch out into more institutional use cases.
Yeah, I think the sort of retail thing would be, they have to, the exchanges will still have to have a part in everything because they're the only place you can on-ramp. Like, eventually, do you see Infinex as becoming even an on-ramp solution?
Yeah, I think we have to be. And, the cool thing is that it used to be, if you wanted on-ramps, you had to build your own. Yeah. If you were a centralized exchange, you had to build your own on-ramps, right? There were no turnkey solutions. Now, you should see my DMs. Like, it is wall-to-wall fiat on-ramp and off-ramp solutions, like just cold DM after cold DM. Like, I've got you. Like, let us get some fiat into this bad boy. So there's a bunch of off-the-shelf solutions. There are customizable solutions. There are fiat aggregators. This is, I don't want to say a solved problem, but very much a problem where there's a lot of infra now. You don't need to spend tens of millions of dollars building out your own payment network. You
did it a little bit differently to how it's usually done. You raised with an NFT, is that correct?
We did sell NFTs, yeah. Capital raise is an aggressive
cool.
term of art. Let's call it an NFT sale.
Okay, yeah. So take us through why you did the NFT sale as opposed to using another mechanism.
We wanted to get as wide a distribution and as much exposure as possible. I was bootstrapping Infinex for the first, I think, like 12 or 18 months. And, we were I think we're getting up to the point where we're spending like $5 or $6 million a year. And that was sort of fine, but it was getting to a point where I was like, all right, if we keep this thing private, we're not going to be able to scale it as quickly as I think it needs to. And so some outside capital would be helpful. But there was also this sense that we could stumble into a low float, high FTV VC coin almost inadvertently. And what I mean by that is if we waited until we got to a point where there was product market fit, revenue and had a ton of traction, even to where we are today, before we actually let anyone get tokens, the price is necessarily going to be much higher, right? All things being equal. And so we wanted to go out and get wider distribution at a lower FTV for these NFTs so that people who were excited early, who had some alpha, right, who'd done the research and were like, this thing is actually going to be really cool, that they had a chance to get access to it early enough that it could be meaningful for them. And so that was the reasoning behind doing it early. I did go back and forth on this a lot. And I was like, Infinex is the type of thing that you could almost run like a company, right? Even as a crypto project, you could just have it be a privately owned thing. You could go and raise equity capital instead of, selling NFTs. But it just didn't feel like the right approach to me. And my view is that having as many people in the ecosystem have access to the platform and have some level of ownership over the platform was the optimal path.
No, it's awesome. I guess we want to bring it back to the user here. I've seen a bunch of airdrops from Infinex lately. I think he gave away a bunch of Pengu. Everyone got a little bit of Pengu.
Luca gave it away. Yeah. We just facilitated.
Yeah, exactly. But, all these sort of airdrops, if it's sort of engaging in Infinex and your sort of infrastructure partners, is that something that's going to be happening constantly on the platform?
Well, I think what's interesting is there is this increasing kind of cross-chain meta. If we talk about Pengu, right, it was, hey, we've got an NFT on Ethereum mainnet, right? And we're going to airdrop to a bunch of communities, not just on Ethereum mainnet, but on some of the L2s and also on Solana, people holding different assets who have done things on Solana. That's not a trivial exercise for a project to do, right? And we saw that, they did a very good job, but they put a lot of time and effort and resources into building this platform that they used once. And, it was a nightmare for them and for everyone, right, to stand this infrastructure up. Now, someone could come along and say, well, we'll build the platform to do this, right? And we'll build it as its own standalone product. But it's such a one-off thing, and it's fairly rare. It might happen once a month or something like that. It's probably not a viable business model, but we've kind of built the infra inside of Infinex to be able to do this because we've got all the cross-chain infrastructure already. So it's a small lift for us to support it. And so we've been going out to projects that are looking to do these cross-chain airdrops and saying, listen, don't build your own platform. As much as it seems like a good idea, you're going to want to kill yourself by the end. So just let us take care of it for you.
Yeah, no, that makes a lot of sense. All right, so moving on to your crypto more broadly, to get the next billion users onto crypto, your user experience is obviously an incredible, important aspect to that. Is that what you see as the biggest hurdle to getting those people on board, or is it something else?
Well, I think we've sort of collectively all said that it's an education problem, right? We just need to educate. People are too stupid is effectively what we're saying. And there's too many stupid people and we need to make them smarter and then they'll be better at crypto. Now, how is that going for us? Not well, right? I feel like it's not going great. So maybe we need to pivot from trying to make people smarter to meeting people where they live and saying, actually, you guys know a whole bunch of things, right? You know how to use Gmail, you know how to use Instagram, you know how to use Facebook, you know how to use all these different web platforms that have spent 20 years educating you on how things work. Why don't we just do things the way that those platforms do so you don't have to relearn a whole bunch of crazy stuff? And that's the plan. And it's a pretty straightforward plan. It's make things work when you click a button and don't make things, both petrifying and really confusing. That's not a recipe for user adoption. So that's the plan. We'll see how it works. My sense is that it's going to be better than the previous plan, which, kind of stalled out after a while, but we'll see.
Yeah, awesome. Before we get to the last one, I just wanted to ask about the DeFi renaissance that everyone's been...
That all the DeFi founders are talking about?
All the DeFi founders are talking about, like, you see...
It's weird. It's so weird that they're so convinced of this. It's really strange.
The obviously glaring issue is you see real projects like Aave or Maker that, obviously had the DeFi summer, have struggled to sort of... have still gotten TVL, still gotten new users, but the price, you know what I mean? It just hasn't gone to all-time high, hasn't become the main narrative. But then you see Titcoin, Fartcoin. Do you think crypto, like, when will crypto grow up? Like, do you think soon enough it will become an asset class where you actually buy, this DeFi protocol is making revenue, I'm going to buy that? Or do you just think it's just not our game? Let's stop pretending to try to do that.
Well, I said this last year. I was on stage with a bunch of DeFi OGs, right? And I said, I think we made a mistake. I say we, I mean me, because I was the one that, I remember I was the one that memed this into existence. I thought this was a genius idea, right? But I was like, all right, guys, what if we go for this like real yield narrative, right? Where it's like real stable and small, like 3% APY, but it's consistent. And it like goes between 3% and 3.2%, just like forever, right? And it turns out that is actually incredibly boring and no one cares about it, which, I mean, who could have predicted that? I don't know. In hindsight, it looks dumb, but we had this situation where, people who are looking for a single digit low APY number in perpetuity are not here. Like that audience is not here. Yeah, like they're buying bonds or not, like nothing. I mean, at this point, they're parking their money in treasuries, right, and getting more than 3% anyway, right? Like it turns out the ETH risk-free yield doesn't really cross the hurdle rate for just treasuries, just parked in some repo fund. So the issue that we have is that the audience of people that want stable, boring yields is not here. Now, that's not to say that they don't exist. Those people do exist, right? Endowments and large funds and retirement saving. There's a lot of people who are looking for stable, long-term, safe-ish yields. The issue is that those people are not in crypto, and so we don't have the audience to kind of tap into that. I think eventually it will get there, but we just got ahead of ourselves, is the honest reality, right? What people wanted was 1,000% APY in a highly volatile, insane scheme that runs for 24 hours and you're not allowed to sleep. And so that is a different thing. So if you're Aave, the cool thing is you are making money. You can keep making money until that audience turns up, and there will be a repricing. And you see this across all asset classes forever, that there are times when the audience in the market is not valuing the cash flows or valuing the intrinsic, value of a business or a product or whatever. And there's a mispricing, right? The PE ratio is just too compressed. And then it'll flip the other way. And then they get too excited and you get NVIDIA where, the PE ratio blows out, right? And that's just human nature. People are overly too bearish at the bottom and too enthusiastic at the top. I think that we will have things like Maker and Sky and other long-standing DeFi protocols that will mature into an ecosystem where that audience does turn up and they are allocating not just to Bitcoin, but down into the longer tail of DeFi yields. I don't think that's this cycle, and I don't even think it's maybe next cycle. It might be a decade before that happens. It was a little bit of hopium in 2021 to be like, hey guys, real yield, here we go. Let's get BlackRock to come and buy us. I think we just got ahead of ourselves, unfortunately. And so my view is that, okay, cool. Like that's fine. You've got a sustainable business. Aave works. It's great. It has cash flows. It's cash flow positive and profitable as an organization, as a DAO. It can keep doing that for 10 years until people turn up. But if you are not that, right? Or if you're not at a scale where you can be cash flow positive and profitable, then you need to attract the audience that we have. And I think we've seen that where people have been going back to higher yield, more volatile yield denominated assets and other schemes that are more likely to get attention because the alternative is meme coins. And so if you're competing against meme coins, you need to have the volatility to get attention against meme coins based on the audience, because the audience that's here want volatility. They want high variance outcomes. And so if you're like, no, that's not what you want, the market wants what it wants. You can either, satisfy it or it's going to go somewhere else.
Nice one. All right, we'll just finish off on one quick question here. We would just love to hear about any innovations in the industry that you're really excited about and looking forward to seeing come to fruition over the next year or so.
I think that we have seen this proliferation of infrastructure, right? And there were billions of dollars invested into infrastructure, and that's gone in a bunch of different directions. But one of the cooler directions that I think it's gone in is much faster blockchains. And we've seen this with Hyperliquid. They had a much smaller validator set, and they were able to do an on-chain club. And that just was much better than all of the other systems that had been built before, even DYDX with their club-like system and the AMM-based perps and stuff. So I think that these much faster blockchains, things like Mega ETH, Fogo, there's a bunch of the Monad, are going to unlock some kind of part of the solution space that will allow us to compete more directly with TradFi. And I'm very excited about that. I don't necessarily, obviously order books are one part of that, but I think it's going to unlock a bunch of different use cases that people are going to be building. And it's going to be very, very interesting over the next 2 to 3 years.
Awesome. Well, let's wrap it up there, Kain. Thank you so much for jumping on, giving us some alpha. And yeah, cheers.
Thanks, mate. See ya.
My pleasure. Thanks, guys.